multiple times now. In last call, which I overall did on Sunday, I went through pretty much the things which I was overall anticipating happening in the markets. What things were they? Well, I was actually looking for Monday being sort of manipulation upwards, reaching into an OT or an order block. Please rewatch that video because we're gonna go through and revisit the things I was looking for and how that actually ended up being an STA. So if you listen real closely, you're gonna get some great sauce. I said this will be the most in-depth call I've ever had, and I'm not exaggerating at all. Alright, we're gonna have this super in-depth with you guys. More or less your real first call ever. This is gonna be a real eye-opening for everybody, hopefully. So let's just dive right into this. So, like I said on Monday, if you go back and listen to the video, alright? Now I am actually screen sharing, so you guys should be able to see it. I've double checked. I'm not ever gonna miss this again. Not ever gonna miss this again. I'm not gonna overall miss sharing my screen, etc, etc. I think you have to just leave the call and just rejoin. That's just what I would overall do. How can everybody see my screen? That's crazy, guys. I was literally sharing my screen. Everybody's seeing it now. I see. Perfect demo. Of course you do. Okay, that means yes, of course. Okay, perfect. I was actually sharing my screen. I don't know, it's some glitch or whatever. Anyways, starting off here on Monday, please, because I'm gonna be looking at the chat, so please, whenever pretty much I'm not sharing the thing which I'm gonna supposed to share, please just let me know in the chat, alright? If you have any questions, I'm gonna go through them a little bit in the chat, and I'm gonna answer the majority of the questions after the fact, meaning after this call and after the recording is done. Then you pretty much have the chance to get all of your guys' questions answered. Hopefully you guys as well have watched the part 1 and part 2 towards the time-based liquidity, because in this pretty much the time-based liquidity will be so important. Alright? So, going through this, starting off, Monday, what I said we were looking for was either a consolidation spooling program to the upside, or, which of course would be then a manipulation, and that's exactly what we saw. We saw a manipulation to the upside here. So if you actually zoom in a little bit, we saw a manipulation to the upside. What did I say we were going to reach for? Well, I said we were going to reach into an order block here and create the high of the week. And that's exactly what we did. So look at that. Exactly to the tick here. So look at this. We just reached into that on Monday. Created the high of the week. And then pretty much we distributed downwards. And this distribution was what I was waiting for, because what is the STA? Is a move in the markets. It's not a model, it's a move. So this move downwards from this, which was the Wednesday high, was a potential move to the downside. And this move to the downside is the STA. Alright, this move from this swing high to this swing low, that's the STA, because that's a weekly expansion. And I've covered this multiple times, but what an STA is that it is a monthly expansion or a weekly expansion, could even be a daily expansion. Now, what did I do? And there's something super interesting. Well, I said to everybody, manipulation on Monday, then pretty much what I was gonna wait for here on Tuesday was actually a potential for an STA happening. However, the STA actually ended up happening on Wednesday. And what did I do? What did I do, guys? Well, it traded into a singular level here. I sent to Damo, and then the STA started delivering lower, and lower. Non-farm payroll ended up being lower. However, I did not take any partials, I didn't have any limits or something like that on the euro buy, because this is the DXY, so I actually took euro buys. Just a little bit of a disclaimer, right? Now, I did not trade today, right? Because we had non-farm payroll. However, the only day I traded was Wednesday. But what I particularly looked for was this time-based liquidity at 10 to 13.00. 13.00, like I said, was the time-based liquidity, part 1 and part 2 videos. In those, pretty much you will see me calling this long range liquidity. And as soon as we total soup that, trade into a singular level here, which is the manipulation deviation level, which I'm pretty much going to teach you today. And we're going to combine it, and you can combine it yourselves as well, which is something I'm going to get a lot of questions after this call, with the Fedwire deviation manipulation alignment. Alright, so it's more specific, the Fedwire deviation. However, manipulation deviations, the concept is super good, which is why I want to teach you guys it. Trade into one of those levels, we traded down lower to what is this? Yeah, we actually had a level down in here as well. So I had a level up here, and I think I could even, like, when we go into EURUSD, I can actually show you guys the levels here as well. But what I would pretty much recommend everyone doing, so you don't think I'm like a fool or anything, like, oh, he's just lying, he actually didn't ever call out the level here. Just go into trades I take P&L, or actually go into potential for trading chat or general chat and just scroll up and look for mine and Damo's conversation, and you will see I was not kidding at all. Alright, then let's just go towards Euro USD, and I'm gonna show you guys the executions here as well, but that pretty much will need me loading up my phone and showing you it. And I could possibly do this, but then you pretty much not see me having the trade in today. So I took the buys down in here with a level. I'm gonna show you how I got the level. Let's just go in here, so that way pretty much I can show you when I actually bought it. So see here. Let's see if this actually works. No, I couldn't paste. Oh, that's sad. But I can actually at least paste in the conversation in here. So I'm just gonna show you guys in the chat. Right there, I took the buy. I think everyone can just click on this, and you'll pretty much see the level right there being 104,787. That was my first buy. I actually took twos. So 7, so 4, so 0, 4, 7, 8, 7. So I think it was somewhere here where I took the buy, but I also took a buy a little bit down below here as well. And of course there I took out a partial. I took out another partial up here, and I did not end up taking a third partial. I'm just gonna keep this for the original consolidation. I'm gonna show you the original consolidation. This will be crazy. You guys will literally it's just an indicator, so it's just this right here. Be amazed of what I'm actually targeting. Alright, you guys will be amazed of what I'm targeting. Alright, so let's just go through this. So starting Monday, what I said would happen was that I was looking for, remember this, load up the Sunday call. Alright, load up the Sunday call. Because what I did here was that I said this has potential, and I think this was it, has potential to reach down lower. So I said, I'm looking for this, reaching down lower, reaching for what? Well, reaching for this and trading into what? The order block. And look where the order block was. So if I actually go in here, you'll see the order block being exactly right there. I said we were most likely going to trade into this right here and trade into what? The start of this. And why is the start of this? Yeah, that's actually interlinked with the manipulation deviation alignment, which we actually got here. So we have an interlinked level with a new week opening gap from 2 weeks ago. So this right here, the big new week opening gap. So we actually trade into that once again, and then we saw the propulsion or the STA move towards the upside. Wow. Now how did I know pretty much we had a level here? So what I'm gonna do now is just move down towards the 5 minutes again, but I'm not providing any higher time frame context. For the high time frame context, I would recommend you looking at the time-based liquidity part 2. Alright, so that's just my recommendation for everybody. So pretty much we opened up right there, so that's pretty much where the alignment should be, and that was pretty much the level pretty much we saw us trading into. You can see right there, trading into that level, which of course I was just looking for a sweep of this. and then trading up higher. Now we're gonna get a more precise level down in here, and I'm actually gonna send you. Hopefully now this is something I can actually put on the charts, show you guys the level I actually sent in the chat prior to it happening to Damo and to everybody here. So this was what I sent. Copy image. No, that's crazy. Why? Why am I unavailable? But you can also just go into, or potentially I can do this. Let me just see here. Let's see. This has potential to work. Yes, that's perfect. So this is just taken from, but you can see the levels here. This is just taken from the trades I take panel. I'm sorry for it being a little bit blurry, but what I would recommend everyone doing is simply just going into the channel itself, and you pretty much see the level here. So the level, you can see this is the new week opening gap, and the two levels here was pretty much the levels I had annotated prior to it. So I was looking for this down, the the level right there, which ended up being, I think it's the 4738. So 4738. Where's the 38? Right there. So it's super precise, you could see. Now let's go into the sauce. So how did I actually find this level out? How did I know a reversal was imminent and a reversal was coming? Yeah, like I've said in, I think, TikToks and such, is that all manipulations in the markets, this is a quote from ICT, can be deviated. So whenever you have manipulation in form of time distortion, whenever you have manipulation in any form of macro, any form of like any sort of form of manipulation, it can be deviated. So that manipulation can actually be deviated. Why can it be deviated from? Right? Or why does it work? Or how can you pretty much get the manipulation deviation working? Like, why does it work? What's the in-depth concept behind it? Well, the in-depth concept behind it is actually that why would the market manipulate, or why would the market take out that amount of liquidity in that amount of pips? Well, it's all pre-planned. Alright, it's all pre-planned of the amount of pips the market needs to sweep the amount of buy side and the amount of sell side, resting above highs or below lows, or any other sort of manipulation in a SIBI or BISI. Alright, it's all pre-planned, because what I'm pointing towards, of course, you see pretty much the swing high being right there. We have also SIBIs right here. So what the market did right here was that it reached up towards that, but the amount of pips reaching up towards that is not a random amount of pips. Alright? So what if you actually deviate these amount of pips towards the given drawn liquidity you have, or towards the given reversal point you have? And where's the reversal point? Well, that's what we're trying to figure out now. So when knowing nothing is literal random, we can use the amount of designated sweep in pips or purges. I don't know how far you have come into looking at ICT, but you know it all pretty much sweeps is pre-designated, and that's pretty much what got me thinking in manipulation deviation and looking at alignments for them. Because what ICT says, he says that all sweeps pretty much needs to be in a pre-designated amount of pips. Now, if there's a pre-designated amount of pips, if you think about it, wouldn't it be possible to then deviate it? Because deviations is just taking the range extended in the amount of pips times price, right? So what this is just this range times 2 stacked. So you have this range just stacked one another on top of it, and then the third deviations is just 3 of these swing high, swing lows stacked upon each other, right? So what if you then get alignments between another sort of pre-designated sweep or a purge? Well, you get an alignment, and what pretty much does the alignment mean? Well, it pretty much means that possible reversal, guys. Why does it mean that? Or why specifically does it mean possible reversal? Well, they swept this buy side and they swept this buy side and repriced this SIBI here for a reason. And if you just deviate this, you will get their drawn liquidity and where they want to take price. And most of the time is below. What do you think now? Below time-based liquidity or above time-based liquidity? Why? Because, alright, because time-based liquidity, under time-based liquidity is where the most liquidity is resting, or over time-based liquidity is where most liquidity is resting. So the market just wants to reach for and take out as much liquidity as possible for it to then reach its next designated target. Accordance to what do you think? The bias and where they want to take the higher time frame drawn liquidity. In which case you'll get an extension or a distribution phase starting. Now this distribution phase will be the STA move. How you enter this is up to you to decide how you enter the move. But the move starts here and the move pretty much ends at the next designated level, up here. So between here and here, you have this being the drawn liquidity, this being the start of the reversal, reaching up towards the drawn liquidity, this being the extension. Now, as long as price has not reached this level yet, you have so many chances of getting entered into the move. So many chances. This will totally revolutionize your trading and totally revolutionize how you see the markets. As now you're seeing them as not only pre-designated, but also through ranges or through the perspective of ranges. So you're skipping the normal perspective of price. You don't know where price will reach because you know where price will reach. It will reach its next pre-designated target. No, I just longed here. So that's just where it took the long, right there. I'm not taking anything. Yeah, precisely. You see it right there. I actually sent the execution right there. Do you want me to send my new executions, like, for today? I can actually do it right now, because I'm still holding it. Yes. I'm just gonna show you here then. This will potentially have the implication of me leaving the call. But, pretty much right here, you can see them. So I'm still holding some buys, but this last trade has the potential of getting me stopped out actually. And I'm gonna go through at the end of this call pretty much what my perspective of the markets is and why it has the big potential of getting me stopped out. Because I'm gonna go through the buys pretty much for next week at the end of this call as well. So see, I'm doing this in depth for you guys. Alright, this is my most in-depth call ever, and I'm gonna show you how I find out the manipulation deviation. I'm just gonna show the executions first. Now this potentially, or I'm just gonna send it in trades I take P&O. That way pretty much I'm not gonna leave Discord when I'm sending the photos here. So these are the two trades I've taken throughout the 2 weeks. You can see it here. I'm just gonna copy paste it here, and then I'm gonna show you the concepts. I've just explained it now, just done a little bit of an introduction to you guys so you understand why it works, why I'm using it, how I found them, alright? And pretty much how you can just discover something else, because when also talking about how I discover them, you can do it yourself. So right there, think I sent it. Perfect, now you guys can see it, hopefully. So these are the two buys positions I have. Pretty much I'm gonna show you my target, my final target. So I'm just scaled out first up here, and then pretty much I took another partial here, and the other one pretty much is just another STA. So you can see STA just catches the weekly ranges. I've done it for 2 weeks now, and it's gonna happen for a third week. STA is just a move, and it's just how I catch the weekly range. So you can see I caught the weekly range right there. I caught the weekly range for this week, and I'm gonna do it for next week too as well. And I'm still holding positions in, because why? What am I actually targeting, and how long will I actually stay in? A couple of months, I think. Couple of months. I'm not gonna lie, because I think we're bullish now for a couple of years, if I'm honest. So I'm gonna show you now. So it's a little bit crazy, right? It's a little bit crazy, but you will be able to do this yourselves as well. So it's not just me. And this is how I trade. So I don't trade like, you know, I'm not a scalper. This is literally what I do. I just catch the weekly extensions. I'm not good at scalping. If I were a scalper, I would be unprofitable. And I'm saying it to you guys now. That does not mean that it's improbable or unprofitable scalping. I just have too much of an ADHD to scalp. I cannot sit there and watch like the real. I cannot sit and wait and, you know, sit and trade. You know, it's super hard for me sitting and trading. If I'm honest. So what I do is that when I just take the STA, find the levels, I just buy, hold, and then just sell at the next pre-designated level when I'm taking the partial. Now let's just go through how I can find the level. I'm sorry, I don't know why, but did I do it on purpose? I don't know. Anyways, let's just show you guys. So, like y'all can see here, you pretty much deviate the manipulations like I told you, everybody. So you just pretty much put it from the swing low right there, alright, to the swing high right here. Thank God there were other people left. They're so lazy. Alright, they don't deserve this. Anyways, we have this, you deviate it, include a wicks. This is manipulation. Alright, this is the Fedwire manipulation deviation. Is that it? No, of course, because it's an alignment. So what you do, you're taking the next relevant, hopefully everybody can see my screen by the way. You're taking the next relevant sweep. Alright? You're taking the next relevant sweep, everybody. Listen up. So what is the next relevant sweep? Well, it's the next relevant sweep is this. Because what you're doing is that you're targeting, you're finding levels under what? Under liquidity. So what's important for everybody, alright? What's important for everybody to listen up now, because this is it, alright? What you want to do is finding levels under time-based liquidity. Alright? Under time-based liquidity. Well, it's the standard deviation. Of course it's freaking the standard deviation, but it's alignments, right? So you're pretty much doing this. I'm sorry, this was just the wrong way, right? How is this an alignment? Well, you're using quadrants of it. So that's pretty much what I did. And of course you wanted to find the first levels, or first level, resting under time-based liquidity for you to find, for you to be able, alright, for you to be able to find the deviation. I'm just sorry here. I just used the wrong one. I'm just sorry here. Yeah, so swing low, swing high, swing low, swing high. Manipulation, relevant manipulation, because it took buy side, reprice SIBI. Here, just took buy side, repricing up towards a SIBI here again, trading down lower. Our targets was the sell side liquidity, because this time-based liquidity, what we wanted to find out is the level, nearest level under it. Pretty much this is the nearest level under it. We're on FX, meaning pretty much it could be a pip of a difference, like I taught you guys on the Fedwire deviation manipulation. And then precisely this is the level we got, or this is the level I used. You could have gotten everything in between here, but makes no difference, right? Makes literally no difference. And then pretty much what happened was that we ended up trading up super high. And I'm still in this buy, by the way, so you know I'm still holding this, but we could potentially get stopped out here, which is something I'm gonna cover later. Now what you can do with this as well to make it even more confident, what the manipulation deviation alignments, what you can do is that you're looking for PD arrays, for value gaps, order blocks, or any other quadrant to align it. Alright, any other quadrant. And I'm going to show you overall some examples, because here you have a quadrant where you have the lower quadrant right there. So lower quadrant, this level, into this, and then upwards. Alright, so PD array, manipulation deviation, alignment, bam, into the level, upwards. Alright, now same thing goes for this high, by the way. So I've actually predicted this high as well. You would just use overall this manipulation deviation and this manipulation deviation. So we just do the opposite towards this. You would not use the same one because you're looking for sell side liquidity to find the potential for buy side liquidity. So if you're overall using buy side liquidity sweeps, you're gonna find levels of low of the day. So buy side liquidity sweep, low of the days, relevant buy side of liquidity sweeps deviated from alignments will find low of the day. Sell side liquidity sweep manipulation deviations, sweeping sell side liquidity will find you the high of the day, aka here. And I'm gonna just show you this quickly here as well. This swing high, this swing low. This is a little bit wrong, so we might get not the most precise. They're taking the swing low, swing high, taking this sell side, because if you're taking sell side liquidity, deviated manipulation alignment will give you the high of the day. So the high of the day pretty much will be. Let's see. I'll just take this away. Let's see the swing high, swing low. I would use this one right there. I'm sorry, this one right there. This is swing high, swing low, taking this. Of course, this is hot lot sauce, alright? But we'll take away this because I've already shown you guys the level here. So what I'm going to show you now is just the potential for the up level here. And we're just going to extend it a little bit here. So now it's just 100% precise. Now, of course, the alignment here. Do you see any alignments here? No, you don't, because you need to do the quadrants. And then you pretty much find the levels. So where you have the precede level, and in this case, just a perceived level over this. We do not have any other levels over this, except for potentially this. Interesting, right? Interesting. Wait, I'm sorry. This right here. You can see none other aligns, or potentially, we have some alignments over this spot. Not under this at least. So right there, what happened? High to the tick. High to the tick, guys. So low, high of the day. That's why I scaled out. Right, I think I scaled out somewhere here because I had this level, so I scaled out somewhere here, but not at the most precise level. And the reason for that is just because I missed it. Like, it did not fill me here, so it did not fill me. What did I do? Just waited for it going lower, so I ended up taking a partial. You can see it. You can just scroll up in this chat and you'll pretty much find it right there. I'm sorry, I'll edit out when I pretty much when my Wi-Fi crashed. I don't know why it crashed right now. Someone hate me, bro. Someone hates me. Anyways. We'll continue, and what I'm gonna show you here is just pretty much how you would do it again, so you understand it. Which how it does again? Oh wow, how it does again. We pretty much dropped this at the same time. So how you would find it out here, how you would overall find it out for this little non-farm payroll, is that we just take the manipulations here. We have this one manipulation right there. Do we have any other manipulation? We sort of don't have any other manipulation, and that's something you could precisely watch out for, because how am I gone? I'm not gone now, guys. So what you would look out for is just potential for sweeps to the downside if you're looking for upside potential. Now, this maybe not sound anything like real special. However, if you notice that if you don't have any alignments towards the downside, what is the potential, guys? What is the potential if you have alignments towards the downside? What I mean by that is manipulations taking buy side liquidity prior to non-farm payroll. Well, if you're taking buy side liquidity here and a buy side liquidity here, after, or at least after non-farm payroll, will be bearish. So I just dropped some non-farm payroll sauce here as well. So you have like a sweep here, for example, taking buy side right there. Potential for another sweep, and you did not get any other sweep. Well, what if this already took the buy side liquidity pocket over here? Because it took these red tick Ys, as everybody can see right here. This high did. So you don't know what non-farm payroll will be. However, you then can figure out what after non-farm payroll pretty much price will be perceived to do. And what price will be perceived doing is dropping down lower because of this right here. Because of this manipulation. Everything manipulated tells you pretty much what price and where price will reach for. And very intricate part of pretty much how to figure out lows and highs. Now, I'll just show you another example, and I'm of course going to show you an example I took. So I actually took this right here, and I've shown you guys this, potentially, but this was also an STA, by the way. So this right here was also an STA, STE, and an STA. And I've shown you this example, but now I'm going to show you pretty much how I found and how I took this buy here. So if you go back into, just scroll up in this call, you pretty much see me taking a buy down in here as well. Alright, and I'm just going to show you this again because I don't want to show you anything else which I've not done. So I'm not going to show you how I got this high, because you can get these highs, but you can never pretty much trade these highs without taking the trades, right? Meaning this is showing just no hindsight. So what did I do here? Well, I just waited for some buy side manipulation because I wanted a low, and I wanted a low below this 930. This is also time-based liquidity, by the way, in a form of what? Well, it's an ST low, because it's pretty much between 9 and 930. Alright, and the sauce is not here yet, guys, so don't, just chill out here. Alright, so we pretty much have this simple stuff, but of the 1300, like I told everybody, it becomes time-based liquidity. So this is overall time-based liquidity low. Alright, so what I was waiting for simply was looking for buy side manipulations here, taking buy side liquidity. So what I wanted to do was pretty much just take this low, this high, I mean, to this low, or vice versa. The manipulation, the thing manipulated taking the buy side. So it's very important here. They need to take the swing low from the swing high, taking the buy side. Which buy side am I overall talking about? I'm talking about this reprice towards all of this fair valuation zone here, or all of this CBs, repricing all of those CBs. But I'm also talking about this buy side. So which swing low to swing high do we need to take? We need to take this right here, right? Because this is the swing low to the swing high, guys, which took the buy side but also repriced at the same time, which is super important and something I'll get thousands of questions from you guys. Alright? Thousands of questions for you guys. Thousands of questions. So what I was supposed to do was just taking everything manipulated. So everything taking buy side liquidity afterwards, or right after the fact, because it needs to be after the fact and after pretty much buy side has already gotten taken out. So what other took buy side liquidity? What other deviated, or what other swing high, swing low took buy side? Well, you have this right here. You have this buy side right there, resting. You could also take this one. You could take this swing low, swing high, that manipulation. And you can pretty much take this swing low, swing high. Right there. Put it right here. What you overall gonna find out is that you're gonna get 75% mark of this. So, you know, pretty much deviate it. I'm not gonna do it right here, but you know, you can just deviate it. I'll show you just quickly here. You know, it takes so long time just doing the deviations here, but you can see pretty much the deviations and how they align right there. Pretty much that's how I got their little alignment. All right, for taking the buy. All right, hopefully you guys saw it quickly. Now just move on towards some more sauce. So took buys, reaching up. Of course, I'm still in the buys. You can just scroll up. Hopefully you saw alignments here, and then pretty much took another one right there from the manipulation deviation alignments, and did not scale out right there. So just note that. But another thing you can do, alright, and this is why the STE works so well, is because you can take the STE and you can combine it with those manipulations of the same given day. Alright, and I'm gonna drop the rules for the manipulation deviations later as well, because there is some rules for it as well, but I've not pretty much showcased it or told you guys about them. I'm just showing you guys the trades I've taken with those things in this particular call. But we could have done, we're moving back towards this example, because this example I've also traded, right? Remember the manipulation deviation right here, we deviated from, and the manipulation deviations here. And I'm gonna get a whole lot of questions. Why do you use the 5 minutes? Well, I prefer using the 5 minutes because I trade on the 5 minutes. So the time frame you're trading on, that's the manipulation deviation time frame you're gonna use. So if you're trading on 1 minute, use the 1 minute, finding alignments. Use those alignments, enter on those alignments. Do whatever on those alignments. It's up to you guys. And if you're trading on the 5 minutes, just use the 5 minutes, which I do. I trade on the 5 minutes catching extensions, right? Distributions for STAs. So alignments was bullish for externals. I had this alignment under this time-based liquidity right there, so I just bought. Simply as the last example as well, where you have the ST as well. Now what you can do, pretty much, and this is something I'm going to show on the other one, so I'm going to move back to the other example first, but I just want to show you guys this first, because this was the first example I showed you guys, and I've also taken this. So 9:30 here, or 9 to 9:30. This is overall the Fed wire injection deviation to 9:30 here. What you can do is they can align manipulation deviations, both of the manipulation deviations, or 3 of the manipulation deviations, or 4 of the manipulation deviations, or 5 of the manipulation deviations, finding alignments between them and combining it with the ST alignments. And where those two align, that's where you have, I would say, the A plus alignment. Alright? From the same day. Yes. Does not work extended throughout the week. It does not work. Just for 24 hours these levels work. They work to the next Asian range, you could say. Except for the manipulation deviations. The manipulation deviations works extended throughout the whole week. Alright? Just note that. But the Fed rate deviations is still same rules. So 15:30 here. Oh, notice I'm actually in here. So wow. Yeah, guys, this is crazy. Which of course gives you just the alignment. So the alignment would be here, and I would just, we can just, I'll just show you this because the range is also an alignment, right? So here you have the range. Oh, I'm sorry, it's actually up here. See, I'm actually tired from this week, but this is the alignment right there. And I know you guys would not have known the range was there, but you would have known the time was there. So you would have literally known that you had an alignment here from this and from this. Just note that that's how we got this level. Now just remember, oh, what is this? This is half part of this. So the first ST aligns with this. Does it become more probable then? Yes, it does. Alright? Yes, it does. How to use if Fed wire deviations or manipulations. How to know? You use them combined. You could use a combination of them. Alright? Some days we won't have as much manipulations as you would like. We won't have 2 or more manipulations. In this case we had 1 and we had 2. Right? But in some cases you will only have 1. In which case you can't align it with another manipulation if you think about it. In that case, they won't work. So what do? You can align it with a Fed wire deviation, or you can just use Fed wire deviations. Remember now. Alright? So here, aligned with the Fed wire deviations, half of this, you can already see it. In this Fed wire deviation time became the reversal. Isn't this a probable setup? Now you know the scenery behind why I took the buy here. So now, Damo, you know the things which made me take the buy here. Fed wire manipulation deviations. We had taken the sell side time-based liquidity here. Externals was bullish. I'm not going to show you the externals. However, they were bullish, meaning the extension would be bullish. We had a Fed wire manipulation deviation alignment plus the normal manipulation deviation aligning with that. Then we overall traded into that in 15 to 15:30. Go into the rules-based Fed wire manipulation deviation. What does it tell you if you move into a Fed wire deviation? In a Fed wire deviation, it tells you it's going to become the low of the day. And what did this become? It became the low of the day. So what did I do? I bought it. And that's precisely what happened. So look at that. Now this is how I trade. I don't trade using fair value gaps. I don't trade so much using order blocks. I just use alignments. That's how I trade. and that's an eye opener for me at least. That's how I would say, more or less. You know, it works best for me. You know, but you know, that's just how I trade. I like trading like this. So I like trading deviations. That's just it, and just levels to levels, and just liquidity to liquidity. That's just how I trade. Don't trade any other way. I, however, also pretty much could have taken 2022 re-entry right there, so I could have bought another time right here in the fair value gap, because that's usually what I do. So what I do is I usually wait for an alignment to get traded into, reaction of that, and enter on a fair value gap after the reaction, or inverse, or in this case it was a unicorn with this fair value gap and this breaker. So I have a unicorn entry right there, upwards. So a little bit of probable price action. Let's just move back towards the other example, which I actually took as well. And we can actually go through, because I actually called out this high right here. And even this high, because I actually took a sell here. Oh, wow, now I have so much things I want to show you guys. But let's just start here, alright? Because all of this things I've shown you, I've traded and I've taken. So don't worry, guys. Don't worry. I'm not in any foolery. You can check it all out in trades I take. But you know, when you get like this sort of nerdy, like I am, you can see probably half point, and let's just take 15, 15, 30 here. So 15, 15, 30 range here, 15, 15, 30. When you get sort of this to this extent of nerdiness, like I am, I'm such a nerd. By the way, I'm like the guy with the glasses trading ICT. That is the nerd I am. Alright? Alright, so like I said, what you could possibly do is that you could align them with, what do you think? The ST. So just note, I showed you all previously, and I showed you all the manipulations pretty much I used. So I'm using this manipulation from this swing high, swing low. Just note that right there. I'm sorry for that. And then pretty much I'm connecting it with this right here. That overall ends up being, and of course maybe it looks a little bit funky, but what you will see is that we have half the 2 and 3, and half the 2 and 3. We have the 7, and what does this give you? The most precise level possible. This is something you could do, and I'm going to show in more in depth in another video, where you pretty much will have the Fedware deviations plus the manipulation deviations all interlinked, and etc, etc. I'm going to go through loads of other trades I've taken using them, but just note, here I took the buy, here I took a buy, and here I took a sell. So you know, buy, sell, buy, pretty much sell all the way through here. But what I'm targeting now, and why I'm targeting that, is just because targeting this little original consolidation high up here. So wow, are you gonna hold that long? Yes, I am gonna hold this long. Alright, because my bias is bullish all the way through next week, and I'm gonna go through the buys during next week's call. Anyways, guys, thank you all so much for this call, and see you all. Bye, guys.